some factors that you're looking at that are coming on your radar when you're looking at areas like growth stocks? Like, what's your process like in going through that and say, hey, wait a second, there's opportunity here?
Well, I mean, the first thing we always look at is the management of the company, whether it's a growth stock or a value stock. You would be amazed how many times we talk to managers of companies and ask how they allocate their capital. What do they do with their cash? How do they make business decisions? Some do exactly as I want. They, have a disciplined process in place. They look at net present values, or they look at returns on capital. Or others, I think it's whoever yells the most gets the money, which that's what we try to avoid. That sometimes when you see companies go out and pay large sums of money for companies, and you wonder why or how do they come out, with that dollar amount. So looking at management is important. Looking at a company that has pricing power, especially now, is important because you're battling inflation. So are they able to pass the cost, their rising cost, on to the consumer? As a consumer, you don't like that, but as a company, that's what we look for, companies that have pricing power. And then finally, the other thing we look for is a company that has, a quality balance sheet that can absorb unknown and pays a dividend, because that dividend actually makes up for inflation too. So that protects you from inflation. So those are a couple of the components we look at. We look at pricing power, we look at dividends, we look at quality balance sheets, we look at management. We do look at growth, but sometimes you can buy a company that's not growing if it has all the other factors lined up in its favor. Preference, I would want a company that's growing, has a product that's growing, but sometimes you can buy a company, great valuations, great management, pricing power, and has dividends, and that can equally win as a stellar growth company.
You've got what's involved in going through processes like that? You got teams of people, you're having investment committee meetings. Like, how does that work?
We have a lot. We have internal research and we have external research. We have a combination. We have what I would say quantitative screening, where what I like to think about is we look for stocks with those characteristics. So instead of looking at the S&P 500, which has 500 stocks, we look for the best 100 that have those dividends, quality, profitability, and pricing, and that might only be 100 stocks. So it's a lot easier to concentrate. And then that's when we look at the companies, we do balance sheets, we do financial statements, we talk to managements, and we sort of kick the tires on the company. You also have to take a step back and see what industry are they in. Like, we hope they're not in the buggy whip industry that's going away. So we hope they're in a growing industry with a healthy company. So it's really a disciplined process that starts from scratch and moves through the whole process. And then we actually have to compare on a relative basis. Does this energy stock in the energy sector give us a better risk return profile than this stock in the financial sector? And we have to compare that to see which one's better for us and ultimately the advisor and the client.
So does that determines does that also determine like what you over and underweight in certain sectors? I mean, based on the number of companies that may be.
Right. There's a top down, bottom to that too. Top down, we look at and say, wow, we need to be defensive now because the economy's shrinking. So maybe we'll add in utilities. When we do our bottom up work, where we really get excited is if we do our bottom up work and all of a sudden 4 or 5 utilities show up on our screen and we like them, then that means you're getting confirmation of the top and bottom. Now that doesn't happen all the time. It would be easier, but that's where we look where sometimes that does cause the weighting to be overweight or underweight at this time. Like I could say right now, we're sort of overweight technology, even though they have some growth potential in there. There's still some valuation issues with rates going up right now that causes issues right now.
Oh, you said you're overweight or underweight technology?
Underweight.
Underweight. Okay, gotcha. Understood.